Why is Bitcoin valuable? Currency lessons from beads, gold, and fiat. Welcome to our exploration of why Bitcoin is valuable. In this video, we'll uncover lessons from historical currencies like glass beads, gold coins, and fiat money, and see how Bitcoin stands apart. Glass beads. As early as the 16th century, indigenous peoples in Africa and North America used glass beads as currency, valuing them for their craftsmanship and rarity. In Africa, glass beads were not just currency but also symbols of status and wealth, integral to social and ceremonial exchanges. European explorers and traders, recognizing the value placed on these beads, began mass-producing them cheaply. This flood of beads into the markets devalued them, undermining their use as a viable currency. Unlike glass beads, Bitcoin cannot be devalued through mass production because it is designed with a fixed supply limit, making it immune to such inflationary tactics. Gold coins. Gold has been valued for its rarity and intrinsic qualities, making gold coins a long-standing currency choice. The Roman aureus, introduced in the late 1st century BC, was initially set at about 8 grams of pure gold. It was highly valued across the expansive Roman territories for its consistency in purity and weight. However, to cope with financial pressures from military expenditures and decreasing gold supplies, successive emperors reduced the gold content. By the mid-3rd century, the weight of the aureus was lowered to as little as 3 grams, significantly mixed with other metals. This debasement led to rampant inflation and a loss of confidence in the currency, contributing to the economic instability that plagued the late Roman Empire. Unlike gold coins, Bitcoin's design prevents such devaluation, as it is a digital asset with a fixed maximum supply and cannot be altered or diluted. Fiat currency. Fiat currencies are modern money, not backed by physical commodities but by government decree. One of the most infamous cases of fiat currency collapse occurred in Zimbabwe in the late 2000s. The government, facing massive economic pressures, began printing money aggressively to pay its debts and fund public projects. This unchecked printing led to hyperinflation, peaking at an astounding 79.6 billion% month-over-month in November 2008. As a result, the Zimbabwean dollar became completely useless, forcing the country to abandon its national currency. Another notable example is the German Weimar Republic in the early 1920s. To cover war reparations and rebuild the economy after World War I, Germany started to print money excessively. The rapid increase in money supply led to hyperinflation, famously reaching a point where people carried wheelbarrows full of money just to buy basic goods. By 1923, the German mark was virtually worthless, devastating savings and crippling the economy. Similarly, during the Iraq War from 2003 to 2011, the U.S. government's military expenditures surged, leading to a significant increase in national debt, which climbed from $6.4 trillion in 2003 to over $14 trillion by 2011. During the COVID-19 pandemic, the U.S. Federal Reserve's balance sheet expanded from about $4 trillion in early 2020 to nearly $9 trillion by 2021, as it printed money to finance stimulus measures. This significant increase in the U.S. money supply mirrors earlier historical trends, such as the mass production of glass beads and the debasement of gold coins, both of which led to the rapid devaluation of these forms of currency. Bitcoin offers a stable alternative to the historical pitfalls of traditional currencies, with its fixed supply and decentralized nature. This digital asset promises a secure financial future, free from the economic mismanagement that has undermined fiat currencies. Thank you for watching. If you found this helpful, please subscribe and turn on notifications to stay updated. We'd love to hear your thoughts, so feel free to leave your feedback in the comments below.